Everybody, welcome to today's fundamentals. Hello, Pedro.
Hello.
What's up in the FX market?
Well, the euro against the dollar is moving in a slightly upward trajectory. Yesterday it was moving slightly downwards, which is a bit surprising following the release of the Eurozone CPI rates yesterday. So they came in higher than expected. Therefore, one would have perhaps anticipated that the euro would have gained in anticipation of perhaps a more hawkish sentiment from the Fed or perhaps more future rate hikes being implied. Now, the British pound is moving in a downwards trajectory and the Japanese yen is moving in an upwards fashion. So it appears, the dollar against the Japanese yen appears to be moving in a slightly upwards fashion. So we're seeing some sort of general strengthening by the US dollar, potentially market retracements as they've been going in a downwards trajectory, perhaps regaining some ground before moving lower. Surprisingly though, the dollar against the CAD, so the loonie, is moving in a downwards fashion. It appears that the Canadian dollar is outweighing currently in the market the US dollar. The Aussie appears to be moving on the up and up. And the Aussie is an interesting story. So the Aussie's employment data that we're going to be discussing a bit later on was better than expected. Therefore, maybe is predominantly, I would expect, the reason as to why the Aussie is moving upwards. And the dollar against the Turkish lira is moving in an upwards fashion as markets are anticipating Turkey's interest rate decision, which is due later on today.
And were also the Eurozone CPI rates released yesterday?
The Eurozone CPI rates that were released yesterday came in higher than expected. So one might imply that inflationary pressures still persist in the EU economy. So what's interesting to compare was statements made that the Eurozone's inflation rates were being brought down by countries such as Italy, Portugal, Spain, and perhaps, I'd say, Greece. And the reasoning behind was, even if the Eurozone CPI rates would have come down, the ECB would still have needed to hike due to Germany's inflation rate, being higher. Therefore, if the Eurozone CPI rates are ticking up, that means I'd give more weight to Germany's inflationary pressures increasing rather than an increase in the other Eurozone countries. So that would be interesting to keep an eye on.
And what about Australia's employment data?
Australia's employment data came in better than expected. So a reduction in employment and an increase in employment. Now, it appears that this has supported the Aussie. Following the Aussie's slightly downward trajectory, it appears that it has allowed the Aussie to reverse course and move higher. So the reasoning behind this is lower unemployment rate, so a strong and tight labor market is what the RBA was fearing under justification for future rate hikes. Therefore, we're being validated in the sense that since there's a tight labor market, the RBA may and will most likely face some pressure to continue its aggressive rate hiking path. Therefore, in anticipation of future rate hikes, the Aussie appears to be moving in an upwards fashion.
And how has gold's price been reacting?
So gold's price appears to be moving slightly upwards. So it's the same story we've been saying. It appears that recession worries and perhaps slowdown in economic activity in various countries may be fueling gold's prices higher.
And how about US stock markets?
Well, the US stock markets are up. So the Dow Jones 30 and the S&P 500 are on an upward trajectory. Yet the Nasdaq 100 appears to have stalled slightly, which is a bit surprising. We should also note Tesla's earnings that were slightly mixed. So when we are saying mixed, what we're essentially saying is that earnings per share and revenue for Tesla actually came in higher. So one would have expected this to support the stock's price, yet their profitability decreased. So it came about, gross profit margins came out in about 18.6%, if I'm not mistaken. So investors are essentially saying that the profitability has decreased. Therefore, even if you did beat earnings per share expectation and revenue, in the long run, this may be causing the stock price to move lower. Yet the justification was that Tesla is essentially investing more in infrastructure. So it's, in the terms of what was said, it's anticipated to reduce your profitability slightly in order to increase long-term growth and increasing sales. Therefore, I would expect the stock price to move higher in the long run, yet for now appears to be moving a downward trajectory. We should also note that Netflix earnings were better than expected. So Netflix has been cracking down on the password sharing. So essentially, if you and a friend were using the same account, now, if I'm not mistaken, you need to log in from the IP that is registered to the account. So despite this, it appears that Netflix has added about 6 million new subscribers. So it's providing a boost for the company. And in their letter towards the shareholders have implied that the positive growth, etc., is anticipated to continue well into the year, therefore sending Netflix's stock higher. At this point, we should also note that Goldman Sachs earnings came in yesterday. As expected, earnings were very disappointing for the bank. It's worrying of a bank this size to report such earnings. It's the worst, I think, since the second quarter of 2020. Therefore, market fears, and if they're not able to recoup or perhaps improve in the coming quarters by the end of the year, that may signal, some long-term fears about Goldman Sachs. And yeah,
And how about the oil prices?
oil prices are moving in a slightly downward trajectory today, yet I don't anticipate for the rest of perhaps for the next month or so that they might move in an upward trajectory based on recent developments. And perhaps if worries of a recession are intensified, we might see oil price coming in lower.
And what else is in today's calendar?
Well, in today's calendar, we're noting Turkey's interest rate decision,
Uh-huh.
the US initial jobless claims figure, the US Philly Fed Business Index, and the Eurozone's preliminary confidence figure, which is anticipated to support the euro. And interestingly, tomorrow during the Asian session, we're noting Japan's CPI rates. So Japan's CPI rates are anticipated to increase about 3.3% from prior 2.2. Sorry, prior 2.2, 3.2. Sorry. So if inflation pressures are increasing in Japan, then there might be more pressure on the BOJ to release more of a hawkish statement. Yet, Governor Ueda has constantly reiterated the bank's commitment to maintaining its ultra-loose monetary policy. So even if it does come in higher, I would expect the Japanese yen to gain slightly, but I would not anticipate a very hawkish rhetoric from the Bank of Japan.
Great. Thank you further for your time. And everyone for watching. Join us after a short break for technical analysis.
Hello, and welcome to today's technical analysis. So what we're going to be looking at today is a few pairs, so mainly the euro dollar, perhaps the Aussie dollar, the euro Turkish lira, and then we're going to be taking some more time looking into the equities market, so mainly Goldman Sachs, and we're going to be looking at wheat as well, Tesla, Johnson and Johnson, and I think that's going to be it most likely for today. So let's make a start looking at the euro dollar. So as we placed our support and resistance lines, including our upwards moving trend line, we can see that the pair has broken below our upwards moving trend line, validating support at 1.1185. The narrowing of the Bollinger Bands, in addition to the RSI indicator below our chart, are implying a sideways bias for the pair. Now, the Eurozone's CPI rates, as we said during the fundamental part of our daily video, was essentially higher than expected. So one might have expected the euro dollar to actually gain, but it appears that it's moving in a sideways fashion. So you can see it validated resistance at R1. Now moving in a sideways fashion with the RSI near 50, applying a neutral sentiment for the pair. Moving on, let's look at the Aussie dollar. So we're in a 4-hour chart right now. As you can see, it's broken above our downwards moving trend line on the heels of a better than expected employment market report. So the data suggested that the labor market remains tight. Note how the wick validated our resistance now to support at 0.6862. So there was a strong bullish candle in the release of the employment data, which implied a tight labor market, therefore punching through R1. The wick is validating that there's actually resistance, so it came back down, gaining some more momentum, perhaps liquidity before moving higher. So what we're going to be doing now is going to be switching our resistance and support levels. So R1 now becomes S1, support and resistance. We're removing S3. It's broken above the 50 RSI indicator and is applying a switch from a bearish to a bullish market sentiment. So we have R1, R2, S1, S2, S3. Now, as we're looking for R3, note that the fact that it's broken above resistance now to support implies also a bullish outlook in itself. So we're now going to be looking for R3, and I think we've found it right about here. Turning point, 0.77009, so 0.07010 rounded up. So this would be R3. Now, there is still worries about China's economic data. As we said in yesterday's live technical analysis, worries about China could weigh on the Aussie. But for now, it appears that the employment data is taking the reins of the pair and is pushing the pair to higher ground, therefore maintaining a bullish outlook for the pair. This is not enough for an upwards moving trend line yet, but we still maintain a bullish outlook for the pair. So now we're going to be looking more into the equities markets, and we're going to be finishing off with wheat, gold, and oil, I expect. So Goldman Sachs continuing the standard trajectory. The earnings report was worse than expected. It's worrying for a bank of this size. Therefore, you can see this is the bearish candle. Yet the upward trend still implies perhaps a bullish market sentiment. However, based on the result of those readings, it appears that maybe the stock has found some support following these statements by the CEO that they're expected to be on track for the middle of the year. Yet, based on what we saw yesterday, I do not see that happening. I think that Goldman Sachs will be having some issues in the long run, therefore potentially pushing the stock price lower. However, on a fundamental, on technical basis, it appears that the stock would be moving higher. So let's move. Let's see if we can add essentially an indicator, the RSI. I'm going to be doing the ATR, relative strength index. There we go, 30, 50, and 70 level. Very nice. So the 70 implies that it's still a bullish market outlook. So strong bullish market sentiment, yet the earnings report may be switching this around. Looking at Tesla. So we're going to be looking at the 4-hour chart for Tesla. So Tesla is an interesting story. You've beat EPS, you've beat revenue, yet your stock price is going down. Why? Profitability. But in the longer run of things, if you're investing money into better infrastructure and you're increasing sales, that's a solid business plan, in my opinion. I mean, it might come lower, perhaps for now, but in the long run, I would expect the stock price to move higher. So we're going to be placing S1 at 282.30. Excuse me, 282. Perhaps we could even place that at 90. Yes. So this would be S1. Actually, I'd like it to touch 283.51. Much better. 0.15. This is S1. Then I'd be looking for S2 at the 256.35 mark. And then we could bring our S3 at the $223.80 mark. Now note it's moving in an upwards fashion. One could even say that it's moving in an upwards moving channel. That cannot be said. So if the price action moves up, then we could say there's an upwards moving channel. But two touches and this close to each other is not enough for me to validate my theory. Yet there is an upwards moving trend line. So that is also a positive. We're maintaining perhaps a short-term bearish outlook for the pair, perhaps coming down to S2 before moving higher. But in the long run, I do expect the stock to increase. So then we'd bring, this is a stock split. So this would be SR1. $6.24. So we're going to be seeing the different ticks. So it's about $30 in difference. So about, I'd say 340 and then 370. 40 and then 374 R3. So R1, R2, and R3. Just quickly place in our labels as well. Also note that even if your profitability has decreased, you have so many companies using your superchargers and your existing infrastructure. You're bound to make money off that at some point. For GM, and then in Europe, you're starting to see an adoption. Rivian as well. So, how much will it weigh on the stock price? Maybe temporarily, but in the long run, expected to see going up, going back upwards. So 308.64. Let's make this. We're also going to be looking at Johnson & Johnson, who is due to release their earnings today. A small reminder, Johnson & Johnson actually settled the lawsuit from a man claiming that the company's baby powder caused him cancer. I don't think that will weigh that much on the earnings report this quarter. Yet, if we see more and more people coming out or more reports about um, products that may be causing health issues, then that would be very worrying for Johnson and Johnson. So, maintaining a bullish outlook for Tesla from a technical and a fundamental standpoint, I do expect the stock to increase. So we're maintaining a bullish outlook for Tesla, and now we're going to be moving on to wheat. You can look at Johnson and Johnson at the end, perhaps, then look at oil and gold. So wheat. So as many of you most likely know, Russia withdrew from the grain deal with Ukraine on Monday, sending the price of wheat higher. But the statements made yesterday by government officials that any ship entering a Ukrainian port could be treated as a military target, is skyrocketing the price of wheat. Why? There are many fears about the supply of wheat, therefore bringing the price higher. Should it continue? And in all honesty, in order for a rapid ascent to move higher, I would expect that Russia might have to prove their threats. Essentially, they're warning that it needs to stop. They might have to take decisive action. I don't think they're going to be targeting any ships flying an American, English, or European, or any other flag, unless it's flying a Ukrainian flag. If a ship is flying a Ukrainian flag, then I think it might be a viable target for Russia. If they do strike a ship, and that's a big if, because it would cause many other problems, but if they do strike a ship entering a Ukrainian port, then I would expect this to skyrocket almost instantly. So personally, I would be waiting to hear any news in regards to potential strikes or missiles being fired, etc., etc. So R1, S1, S2, S3, and then let's go for R1, R2, and R3. So right off the bat, I'm seeing resistance at this turning point here, 750.50, 57, but we could be brought at 55. Yes. So this would be R1. And then I would place R2 right around here, 781.80, rounded up. And then we'd bring R3. That's a bit too close for comfort. R3 would be at around the 808.9695 mark. I would not be surprised if reports about a Russian strike come in, like breaking R2 instantly and moving towards R3. Yet, if news come out that they might be discussing a new deal, etc., etc., I would expect to break S1, move towards S2. Yet on a technical basis, very high above the 70 RSI figure, implying a very strong bullish market sentiment, implying that it will potentially move higher. So we're maintaining a bullish outlook for the commodity. Upwards moving trend line was broken, yet formed a new one and is currently moving even higher. Perhaps let's see if we could place. It's a very steep. We can't even place an upwards moving channel. It's just too strong, moving too high. So we're maintaining a bullish outlook for the commodity, and we're going to be looking at Johnson and Johnson at this point. Let's see. So for Johnson and Johnson, this would be S1, 57.50. S2, and then S3, too close to S2. $157.50, $153.70, and then 148.50. Excuse me, not 50, 140, 149. And then R1 could be placed potentially at trying to see the closest, perhaps, turning point. Might be placed at 161.50. This would be my R1 for Johnson & Johnson. If they exceed revenue expectations, I would expect bullish outlook for the stock. Yet it appears to be moving in a downwards fashion. And based on what was released, perhaps they might be not be doing that well. This is R2, 165.70. Note the continuous touches. Starting off here, nicely on this turning point, and then a lot of price action around here. And then R3. $169.35. But for now, we will be maintaining a bearish outlook for the stock. Why? There's an indicator below 50 implying a bearish sentiment. Yet the failing to break below S1 could mean that the pair might be moving in a sideways fashion up until the release of their earnings. And we're going to be looking at the euro and the Turkish lira, since their interest rate decision is due today. It's just moving in an upwards fashion. Just look at this trend line on from the 30th of May, yet to be broken, moving higher. We could even place a sideways moving channel from here. Still, maybe not yet, but S1. It's broken above the $30 mark. New all-time highs on the daily. So 29.95 is S1. The breaking above the 30 key psychological level is another step for the Turkish lira. It appears, even if they do hike slightly, I don't think it's going to be enough for them to provide support for the currency. There's no need for them to switch from their current economic policy as of now. They've been signing deals about energy, deferring payments, either with Russia or the UAE. I think the UAE also announced a stimulus package for the economy. So there's no need for them to abandon their current monetary policy. Therefore, I would not be surprised, even if the bank does hike, I would not be surprised to see the pair moving higher. Excuse me, this is the euro against the Turkish lira, not the dollar against the Turkish lira, but still moving higher. It might be prudent to look at the dollar against the Turkish lira. Still, euro moving higher. And we're going to be looking at dollar Turkish lira. Euro Turkish lira moving higher. The dollar against the Turkish lira appears to have stagnated. For now, it's moving in a sideways fashion between R1 and R2. So we're going to be moving S1. This becomes S1. Resistance now turns support. So R2 becomes R1. Could I then actually bring 2750? I mean, it does appear to be finding some resistance, yet meaningful resistance might be at 2750. And then, since it's all-time highs again and again and again, I would place R3 at the $32 mark. If it does break above the $30 mark, I expect it to go slightly higher, maybe aiming to touch the $32 mark before moving back to the 31. 32 might be a bit too much. Or 30.50. Let's just measure the difference. It's about 49. Okay. 30.50. Breaking above the 30 key psychological level. Perhaps finding support at the $30.5 mark. And then moving retracement perhaps to the 30 big figure. Or 29. It depends on the rate hike, depends on the guidance, it depends on a lot of factors. But I expect the pair to move higher. At least from a Europe perspective, the technical analysis is indicating that it will move higher. Well, might move higher. Strong bullish market sentiment. RSI is still at 70 for the dollar Turkish lira, applying still a bullish market sentiment as well. So maintaining a bullish outlook for the price action for the pair. Now let's have a look at oil. Note how nicely it's touching R1. Failed to break above. Is still validating our upwards moving trend line, so we're maintaining a bearish outlook for the commodity, moving higher. And lastly, I think we might be looking at gold. So as you can see, gold is broke above R1, R2, and R3. So this would be newest one. 1,976 would be S1. R2 becomes S2. Support and resistance, validating our bullish outlook for the precious metal. And then R1 becomes R3. And now we're going to be placing R1, R2, and R3. Formation of an upwards moving trend line. Perhaps. Let's see if we could even place an upwards moving channel. Perhaps, yes. We could be placing an upwards moving channel. Moving higher. For now, yes, so we maintain a bullish outlook for the price of gold. Why it's above 70? Well, it's at 70, applying a bullish market sentiment. And then it's at 1,981. So I would be bringing R1 at the 1,988 mark. Then R2, $2,003 mark. And then R3 I would place at around the 2020 level. So from a technical standpoint and from a fundamental standpoint, maintain a bullish outlook for the price of gold. So you can see it's validating S1. We had S1 slightly higher, broke above, so bullish outlook in itself. Upwards moving channel, upwards moving trend line. RSI near 70, bullish market sentiment, breaking above R1 for it to continue and moving towards R2. Yet if it breaks below our upwards moving channel, then I would switch to bearish outlook. Please note, even if it does break below S1 temporarily to retest the mid-range of the Bollinger Bands and our upwards moving trend line and channel, I would not switch to a bearish outlook. For that to happen, it would need to break below S2. And with that, we conclude today's live technical analysis. Thank you for watching, and until next time.
Everyone, my name is Emily and today we're going to talk about inflation. In a market economy, prices for goods and services can always change. Some prices rise while some other prices fall. Inflation occurs when there is a general increase in the prices of goods and services. It means you can buy less for €1 today than you could yesterday. In other words, inflation decreases the value of the currency over time. When measuring inflation, all goods and services that households consume are taken into account, including everyday items such as food and petrol, durable goods such as clothing, PCs, and washing machines, and services such as hairdressing, insurance, and rented housing. All these goods and services that households consume during the year are represented by a basket of items. Every item in this basket has a price, which can change over time. The annual rate of inflation is the price of the total basket in a particular month compared with its price in the same month 1 year earlier. In a healthy economy, annual inflation is usually in the range of 2 percentage points, which is what economists consider a signal of pricing stability. And there can be positive effects of inflation when it's within range. For instance, it can increase spending and thus stimulate demand and productivity when the economy is slowing down and needs a boost. On the contrary, when inflation begins to exceed wage growth, it can be a warning sign of a struggling economy as consumers' purchasing power will decline. Inflation impacts consumers most directly, but businesses can also experience it. As mentioned, when inflation rises too much and it is higher than wage growth, then households or consumers lose purchasing power as the prices of items they buy, such as food and petrol, increase. Companies also can lose purchasing power and see their margins decline when prices increase for raw materials used in production, such as coal and crude oil, flour, and steel. To respond to the rise in prices, companies tend to raise the prices of their products or services to offset inflation. This means that the products that consumer will buy will become more expensive. Statistical agencies measure inflation by first establishing the current value of a basket of various goods and services consumed by households, referred to as a price index. When calculating the rate of inflation over time, agencies compare the value of the index over one period to another, such as month to month, which gives a monthly rate of inflation, or year to year, which gives an annual rate of inflation. For example, in the United States, the Bureau of Labor Statistics publishes its Consumer Price Index, which measures the cost of items that consumers buy out of pocket. The CPI is broken down by regions and is reported for the country as a whole. Another measure of the prices that people living in the United States or those buying on their behalf pay for goods and services is the Personal Consumption Expenditures Price Index, which captures inflation across a wide range of consumer expenses and reflects changes in consumer behavior. Thank you so much for watching us.
For today's webinar, we're going to be talking about backtesting your strategy on MT4 and MT5. So if you have any questions throughout the webinar, feel free to let me know in the chat and I will answer them as soon as I can. And we should be able to get through the slides pretty quickly. So we might have time at the end for some setups or looking at some live analysis. So feel free to let me know in the chat if there are any specific currencies or commodities that you'd like me to go through. And yeah, once I'm done with the slides, I'll be sure to go through those. Okay, so as per usual, before we get started, just a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, let's get started. So I'm Melanie. I'm from the company Everest Fortune Group, who were finalists for Best FX Research and Best Equity Research in the years 2019, 2020, and 2021. Okay, without further ado, here's our agenda for today. So we're just going to do a really brief introduction to MT4 and MT5 in case you are not familiar with them. And then we're going to do a comparison and then some tips for trading on MT4 and 5. And we're going to deep dive into backtesting. Okay, so MT4, short for MetaTrader 4, is a widely used trading platform that is highly recommended for beginner traders. So here we have a screenshot of just the layout of MT4. So we have all of the charts laid out nicely, and you can minimize them as and when you wish. There are a few differences between this and MT5. I'll show you in a little bit. Let's get into some characteristics of MT4 first. So just a brief intro to MT4. Firstly, the access to multiple markets. MT4 provides access to various financial markets, including forex, currencies, stocks, commodities, and indices. This allows you to trade different instruments within a single platform. Number two, MT4 is really easy to install on your computer or mobile device, and most brokers offer MT4 as their primary trading platform and provide step-by-step instructions to set it up. Once installed, you can quickly create a trading account and begin trading. So MT4 also features an intuitive and user-friendly interface. The platform offers customizable charts, real-time codes, and a variety of technical indicators and drawing tools to help you analyze the markets effectively. Next, MT4 also provides a wide range of analytical tools. So these include built-in technical indicators, such as your moving averages, your MACD, RSI, so on and so forth, charting capabilities, and the ability to create custom indicators. So these tools can help you in identifying trends, patterns, and potential entry and exit points. So one of the key features of MT4 is the ability to use EAs. So EAs are automated trading systems that can execute trades on your behalf based on predefined trading strategies. So MT4 allows you to develop your own EAs or use the existing ones from the community. Next, backtesting. So MT4 also enables you to backtest and optimize your trading strategies using historical data. So you can test your strategies against past market conditions to evaluate their performance and make the necessary adjustments. Mobile trading. So both MT4 and MT5 offer mobile version for both iOS and Android. So you can monitor the markets and manage your trades on the go. And lastly, community and support. So MT4 has a large and active trading community. So on there, you can find online forums, tutorials, and educational resources dedicated to MT4. And you can learn from experienced traders and share your own knowledge as well. Additionally, most brokers offer customer support to assist you with any platform-related queries. Okay, next, let's take a look at MT5. So for MT5, here is the interface for MT5. You can see it's pretty similar, but there are just a couple of differences that we'll mention in a bit. So here are the characteristics of MT5. You can see there are a couple of similarities, but MT5 offers even more, or rather a wider diversity of financial markets. So this actually includes cryptocurrencies, which MT4 does not offer. So this allows you to diversify your trading portfolio and explore different market opportunities all within a single platform. Of course, they also offer stocks as well, forex currencies, commodities, futures as well. So next we have the user-friendly interface. We mentioned this earlier, so I'm just going to skim past it. And next we have the enhanced timeframes. So MT5 expands on the timeframes available in MT4. It offers 24 different timeframes for chart analysis. So this allows you to analyze price movements in greater detail and find trading opportunities that suit your preferred time horizon. Next, netting and hedging systems. So MT5 offers both these systems, providing flexibility in trade management. So if you're asking what exactly are these, so firstly, the netting system allows you to have only one open position per trading instrument. The hedging system enables you to open multiple positions, including opposite directions, for the same trading instrument. Okay, MT5 includes a depth of market feature, also known as level 2 data. So it provides you with information about the current bid and ask prices, as well as the available liquidity at different price levels. So this feature allows for better understanding of market depth and can assist in making more informed trading decisions. Economic calendar. So MT5 also incorporates an integrated economic calendar, providing you with important economic events, news releases, and their potential impact on the financial markets. So this feature helps you stay informed about key market moving events and adapt your trading strategies accordingly. Number 7. So MT5 offers advanced backtesting and optimization capabilities, allowing you to test and fine-tune your trading strategies using historical data. So similar to MT4, you can assess the performance of your strategies under various market conditions and optimize them to improve their effectiveness. So I mentioned earlier that both MT4 and MT5 are available as a mobile version as well. Okay, lastly, community and support. This is pretty self-explanatory, so I'm gonna skip that as well. So MT5 offers more advanced features. So it's important for beginners to educate themselves about trading concepts, risk management, and develop a trading plan. And it's more for a MT5 is more for a comprehensive trading experience since it has all of the features required all in one app. Okay. I've briefly touched on some of these, so I'm just gonna skim through these as well. So there are a couple of similarities that I mentioned earlier and a couple of key differences that we want to point out. So firstly is the programming language. So MT4 uses MQL4, which is MetaCode's language 4, whereas MT5 uses MQL5. Now, MQL5 is an enhanced and more versatile programming language compared to MQL4. So this offers more advanced features and capabilities for developing custom indicators, EAs, and scripts, if that is something that you are looking at. Next, we have market coverage. So we mentioned this earlier, but MT4 primarily focuses on Forex trading, whereas MT5 offers a wider range of instruments, including stocks, futures, options, and crypto. So MT5 provides traders with access to multiple financial markets within a single platform, whereas MT4 is a little bit more limited in its market coverage. Okay, next we have timeframes. So we mentioned this earlier as well, but MT4 only offers 9 standard timeframes, which could be enough for you depending on your trading strategy. But if you prefer looking at a wider number of timeframes, then you could look at MT5 since it expands this to 21 timeframes, providing more flexibility and granularity for traders. Hedging. So MT4 supports hedging, which means that traders can hold multiple positions of the same symbol in opposite directions. So it allows you to open both long and short positions simultaneously for the same currency. Whereas MT5, it eliminates hedging and adopts a netting system, where only one position per symbol is allowed, and each subsequent trade closes or modifies the existing position. Next, we have depth of market. So MT5 includes the DOM feature, also known as level 2 data. So it provides traders with information about the current bid and ask prices, as well as liquidity that's available at the different price levels. However, this feature is not available in MT4. As for our economic calendar, this feature is not present in MT4, but it is present in MT5 because it incorporates an integrated economic calendar. So it also tells you how prices will be affected based on the different news releases or economic events. However, even though MT4 doesn't include this, but there are many websites that you could use to strengthen your fundamental analysis as well. So one that we are really fond of using is the forexfactory.com, because you can adjust the weeks that you're looking at, weeks or days that you're looking at, and it will tell you all of the important events. It will even indicate the significance of these events as well. So not too much of a problem if you don't have the economic calendar integrated into MT4. It's just more for ease and convenience. Okay, next is backtesting and optimization. So MT5 offers improved backtesting and optimization capabilities compared to MT4. So it allows traders to perform more accurate and detailed historical testing of trading strategies and optimize them based on various parameters. Lastly is the user interface. MT5 has a more modern and user-friendly interface compared to MT4. It provides enhanced charting tools, more customization options, and a more intuitive overall experience. So while it's important to note that these are the differences, but both platforms are widely used and supported by different brokers and offer a wide range of features and tools for traders. So the choice between MT4 and MT5, it really ultimately depends on your specific requirements or trading style, as well as the markets that you wish to trade in. Okay, this is just a summary of everything that I've mentioned earlier. Yeah, I've mentioned everything, I think. Let me just see if there's anything else. So MT5, because it uses a different programming, it's also slightly faster, 64 bits, and it's multi-threaded as well, compared to MT4. But if that's not an issue for you, then MT4 is good enough. Okay, yeah, let's move on. Tradable instruments. So these are the tradable instruments that are available on MT4 and MT5. Okay, but this list is not exactly completely accurate because it really depends on the broker that you are opening a trading account with. Okay, the only exception is that you can trade crypto on MT5 only. Okay, timeframes, we mentioned this earlier, but how exactly you can determine whether 9 timeframes or 21 timeframes, which is better for your trading strategy. 9 timeframes should be enough for swing and long-term traders, whereas 21 timeframes just gives traders an advantage for deeper analysis of your favorite assets. Okay, so technical indicators, MT4 offers 30 built-in technical indicators and 2,000 custom indicators from the free code base, whereas MT5 provides 38 built-in technical indicators to get insight into market direction. So in addition to the free indicators, MT4 also offers over 700 paid ones in the market. So it's definitely enough for market analysis. Okay, for charting tools, MT4 and MT5. MT4 has 31 graphical objects, such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. MT5, on the other hand, offers us 44 graphical objects, including geometric shapes, channels, Gantt, Fibonacci, and Elliott tools. Okay, in terms of the types of orders as well, MT4 offers 4 types: buy stop, buy limit, sell stop, and sell limit. MT5 offers 6 types of pending orders. Those offered by MT4, as well as the buy stop limit and the sell stop limit. So we mentioned this earlier as well. So MT4 tends to be recommended for beginners because it's easier and simpler to use compared to MT5. So MT4 is the best platform to trade Forex because it was initially designed for the needs of Forex traders. However, the cons is that MT4 has fewer trading options than MT5 and is a little bit slower. So some pros and cons for MT5. It allows more markets for you to trade, has more charting tools as well, and more time frames. But it can appear to be more complex for beginners, and few robot and EA developers opt for MT5. So if you're wondering which is better, both platforms MT4 and MT5 are popular amongst traders. So in short, if you're new to trading, MT4 is the right choice. The basic functions in MT4 are more than enough for trading. If you already have experience, then you can try MT5 since it has more features. Okay, so top 6 tips for MT4 and MT5. Tip number 1 is to use the MetaTrader Market Scanner. So this is a powerful tool that can help you find trading opportunities because it allows you to scan for specific conditions such as price movements, technical indicators, and economic events. So you can then use this information to make informed trading decisions. Number 2, create custom indicators. So custom indicators are a great way to tailor your trading experience to your specific needs. You can create indicators that track data points that are important to you, such as support and resistance levels or moving averages. So this can help you make better trading decisions and improve your overall performance. Number 3, use EAs. So EAs are automated trading platforms or programs that can help you to execute the trades. So we mentioned this earlier, but it basically helps you to place your orders, manage your positions, and close your trades automatically. So EAs can take a lot of guesswork out of trading and can be a valuable tool. Number 4, manage your risk. So risk management is a really important part of successful trading. You need to know how much risk you're willing to take on, and you need to set stop losses accordingly. So this will help you to protect your capital and avoid making costly mistakes. Okay, stay disciplined. So discipline is essential for any trader who wants to be successful. You need to have a plan and stick to it. Emotions can cloud your judgment, so it's important to remain calm and focused when trading. Tip number 6, have realistic expectations. So it's important to have realistic expectations because you're not going to make a fortune overnight and you need to be prepared for any losses. So if you keep your expectations in check and focus on long-term success, you'll be more likely to achieve your goals. Okay, so let's get into backtesting. Okay, so what exactly is backtesting? So it's basically the use of historical data, to test your strategy. Sorry about this. My throat is acting up because the weather is getting really cold. So backtesting is a crucial process in trading that involves assessing the performance of a trading strategy using historical market data. So it's just a way to evaluate how a particular trading strategy would have performed if it had been applied to past market conditions. So of course, it uses historical data, knows the behavior of your strategy, fix your strategy, and helps you to improve your strategy. So how exactly the process of backtesting is? Let's see if I have the slides here. Okay, these are some things to just watch out for: net profit or loss, volatility measures, averages, exposure, ratios, and annualized return. But the process is typically you start off by formulating a trading strategy that includes specific entry and exit rules. So this strategy can be based on technical indicators, fundamental analysis, quantitative models, or combination of factors that we've mentioned on this slide. Next comes the data selection. So historical market data, such as price and volume data, is collected for the period over which the backtest will be conducted. So the data should cover a representative sample of market conditions, including different market cycles and volatility levels. Next, you then execute your trade. So the trading strategies rules are then applied to the historical data that we mentioned earlier, and then you simulate the execution of trades based on the strategy's signals. So this involves identifying potential trade, entry, and exit points according to the specified rules. Next is then comes in your measurement for the performance of your strategy. So the simulated trades are then tracked. Key performance metrics are calculated, such as profit or loss, win rate, average trade duration, and risk-adjusted returns. So these metrics help to assess the effectiveness and viability of the trading strategy. And then lastly would then be your analysis and optimization. So then traders analyze the results of the backtest to gain insights into the strategy's strengths, weaknesses, and areas for improvement. So they may adjust parameters, modify rules, or explore alternative strategies to enhance performance. Okay, that's just in case you were wondering how exactly you go about backtesting. So here's one of the strategies, tick-by-tick backtesting. So for tick-by-tick backtesting, you would require in-depth data, volume weighted into price, creation of elaborate models, prevent unexpected surprises, and you would need to simulate your trade execution, which is pretty similar to what I've recently mentioned. Okay, common backtesting mistakes. So firstly, you could get an unrealistic backtest result, and that's how you would know. You would either have to repeat your testing, or change a variable, which you would have to analyze. Next, do not overmine your data, because there are a lot of factors that come into play when you are trading. A lot of market conditions that are beyond your control. Next, getting the timing right. As I mentioned earlier, volatility is a big thing that could affect your results. So it's important to get the timing right for your execution of your trades. And lastly, incorrect assumptions. So based off of the results of your back testing of your trading strategy, then you have a certain number of assumptions that you make off of those results and not based off of whether you think that it's right or wrong. Okay. Okay, that brings us to the end of my slides, but let's go ahead and get started with some charts. So if you have any requests for any charts, feel free to let me know in the chat. One practical trait for backtesting. So most of the backtests are conducted on, excuse me, on any of the majors, typically, especially if you are trading Forex. So be something pretty basic like any of the majors. If you're trading commodities, then perhaps gold. Those are the common ones that are used for backtesting. If you're asking me to show you how to conduct a backtest, I can't do that now because that requires a software or programming language that's specifically designed for backtesting. So I can't exactly run the backtest for you guys to see currently, but if that's something that you are interested in, feel free to let us know and we could do a webinar on that soon. So maybe let's go ahead and analyze one of the majors together first. Okay, let's go ahead and analyze the euro dollar together. Okay, so as per usual, we want to look at the higher time frames first and then do a top-down approach. So we're going to take a look at our higher time frames first, just to get the general direction. So here we can see price moving upwards. That's our general direction on the weekly time frame. And if we take a look at our daily time frame, our general direction is upward as well. Let's see if we have a parallel channel. Okay, no. But we do all agree that prices look like they are heading upwards. I think we have a trend line here. Okay. Okay. Now we typically will do our analysis on either the 4 or 1 hour time frames. So let's go ahead and take a look at that. Okay. So First things first, we want to see if we can identify any trend lines or trend channels. Okay, it doesn't look like there are any trend lines here. Okay, but it does look like price is moving within this ascending trend channel. So for a valid trend channel, just to recap, you want to make sure that there are 2 touches on top and at least 2 touches below. Okay. So now that I've done that, let's go in with our support and resistance levels. So over here would be my first resistance. And you see, I want to pull it back as far as I can without cutting too many candlesticks, just so that I can see how significant this level is. So I've placed it here. I can see that price has tested this level many times in the past. Okay, and then this is my first support. So this is just purely based off of graphical analysis. So purely just swing highs and swing lows that are closest to where current price is. Then we'll go in later with our Fibonacci levels to adjust the levels accordingly, if we need to. Okay, and then here is my second resistance. Okay, now that we've done that, let's go in with our Fibonacci levels. So I'm looking for a Fibonacci retracement. So for Fibonacci retracement, we want to look for, we look at 5 specific levels. We look at 23.6, 38.2, 50%, these 5 levels, 61.8 and 78.6. But I can see that my 38.2 lines up nicely with my second support. So I'm just going to go ahead and keep that. Okay, and then I'm going to see if I have another retracement over here. So same thing, I'm going to look at these 5 levels. And I can see 78.6 lines up with my second resistance. Now, even though the 61.8 lines up nicely with my first support, but because price has already broken this level, so we can no longer use it. Okay, whereas in this case, the 78.6 price has yet to retrace back to the second resistance at the 78.6 level. Okay, so now I'm going to look for a retracement. So for projection. So for projection, we use these 3 levels, 61.8, 78.6, and 100%. And you want to remember when you're looking for a projection, that you want to look for this flash kind of shape, like a Harry Potter lightning bolt kind of shape. Okay, and in this case, I can see my 100% matches nicely with the second support and the 38.2. Okay. Okay, now that we have all of our Fibonacci levels, we can go ahead and include some indicators to support our analysis. So we typically like to use Ichimoku and MACD, and I can see price is moving above the Ichimoku cloud, giving us a bullish bias. MACD, however, is giving us a bearish signal. So I'm going to pull out RSI. Okay, and RSI is giving us this, or rather it's moving in this ascending trend line as well. Yeah. Okay, so I'm going to get rid of that MACD. So we can expect prices to bounce off of this level and head towards our first resistance. But since we can't find any Fibonacci levels to support this level, it's considered a pretty weak level. So we could see it break as well. But I do want to mention that even though we cannot find any Fibonacci levels, this level in itself has 1, 2, 3, 4 currently touches on its all on its own. So this is what we call a overlap support level. So it's a pretty strong level, and we could see price continue to bounce off of the level and continue within this ascending trend channel. Okay, and that's all for Euro USD. I think we have time for one more chart. So feel free to let me know if you have any requests. If not, maybe we'll just go ahead and do the XY, just a commodity instead of, since we've already done a Forex currency. Okay, so same thing, we're going to do a top-down approach. Can see on our DXY prices, this is kind of a downward movement. Okay, on our daily time frame, it's also looking like the general direction is downward, although there is a slight reversal here, but the general direction is still downwards as well. Okay, let's begin our analysis on the 4-hour time frame. Okay, I have this descending trend line, but I want to see if we have a descending trend channel. Okay, we do. So we typically will try and look for channels instead of lines, because trend lines, or rather for trend channels, it's a lot easier to see if there will be a continuation or if there will be a breakout of the trend channel. Okay. So now let's go ahead with our support and resistance levels. Okay, here's my first resistance. So for our first resistance, it's typically the closest swing high to where price currently is at. Conversely, for your support, it will be the closest swing low to where price is at. Okay, and then for the second resistance and support, that really depends on either the graphical analysis or on your Fibonacci levels. Okay, I'm gonna leave the second resistance out first. Here's my second support. Okay. So let's get started with our Fibonacci levels. So same thing, now I'm looking for a retracement. So earlier I mentioned that I will leave my second resistance for later. So this is the reason why. I'm just going to use my Fibonacci to help me. And the reason for that is because for this specific graph, we have a lot of swing highs and swing lows. Okay, here. Okay, so we have a 78.6% that lines up with my second resistance. And my second resistance is significant on its own as well because it is an overlap resistance. Okay, and I can tell my 50% Fibonacci retracement is nicely in line with my first resistance. Okay, now I think I have another retracement here. Okay, yes, my 38.2 lies nicely with my first resistance and the 50%. So this is a major confluence area for us to take note of. Okay. So now let's pull out some indicators once again. Ichimoku, MACD. So prices are moving below the Ichimoku cloud on our Ichimoku indicator, giving us a bearish signal. On our MACD, it's giving us a bullish signal. So same thing, I'm gonna pull out RSI. Okay, RSI isn't really telling us much. So I'm gonna pull up stochastic. Okay. So for our stochastic, price, you can see price has made a lower high on our price chart, whereas on our stochastic, price has made a higher high. So this actually suggests that there could be upward pressure pushing price upwards. Okay, but we would have to be careful because of this major confluence area with the 38.2 and the 50%. And this first resistance is also a double swing high. Okay. Oh, it's actually an overlap as well. So because of all of these factors, it's a confluence area. So we could see price reversing off of it, or we could see price pushing forward, that's suggested on our stochastic, pushing up to our second resistance, and maybe not up to our second resistance actually. Let me just because price is moving in this descending trend channel, we could see price break out of the first resistance, but still rebound off of the descending trend channel, because there is still a lot of downward pressure, since on our weekly and our daily timeframes, it gave us a general downward movement. Okay, so we have to be careful with this one. And yeah, I think that's all the time we have for today. But we still have a few minutes. So before I end, feel free to let me know in the chat if you have any other questions. Yeah, if not, you can feel free to leave the room. Thank you guys so much for joining today. Hope you guys have a great rest of your week, and I'll see you guys next week. Bye.